Today, we're diving into a critical issue that every veteran considering a VA home loan needs to be aware of. Recently, a major player in the veteran mortgage industry reached a settlement with the Consumer Financial Protection Bureau. They agreed to pay $2.25 million in civil penalties, but they didn't admit or deny any wrongdoing. This situation shines a light on the importance of understanding the full details before committing to a loan offer. The CFPB's allegations against this mortgage company involve misleading net benefit worksheets. These worksheets reportedly misstated the monthly mortgage payment, creating a false sense of savings. Another important place you can see this total payment is on a loan estimate, and then that loan estimate turns into a closing disclosure. So I'm going to share with you guys what the VA came up with. This is now back on February 14th of 2019. The VA issued VA Circular 26-19-05. And I'm also going to drop a link to this circular, the worksheet, and the article that I'm referencing in today's video. All right, so let me share this with you guys. Give me a second. All right, so this is that circular from February 14th of 2019. It's important to understand because I'm going to go through it, and I'm also going to give you guys some examples of what the VA is talking about, right? So this is talking about VA cash out refinances. This is just saying like interest rate reduction refinances, loan regulations are going to be upcoming, but obviously we're in 24, so it's already come out. So basically it's telling you here, we have the interest rate reduction refinance loan, and then we have two type 1 cash out refinance and a type 2 cash out refinance. So on a type 1 refinance, that's where your new loan amount does not exceed the payoff amount of the current mortgage being refinanced. And it's also subject to separate stipulations. This could be where if you're refinancing your home, but you're bringing money to the closing table, so you're not paying for, you're not rolling in closing costs. The other type is a type 2 cash out refinance where the new loan is going to exceed the current mortgage balance. Now, that's something we normally see. That's like the normal thing that we see. And then it kind of gives you some guidelines. Loan to value, right, is the VA doesn't guarantee on a refinance loan to values exceeding 100%. So if you have a service connected, if you don't have a service connected disability, no matter how much loan to value you have, the VA funding fee is 3.3%. So that gets calculated into the 100% financing. On a purchase, it's a little bit different because you can exceed the 100% loan to value by rolling in the VA funding fee. So that's just something to keep in mind. And this is why another reason why it's also difficult for veterans if they don't use the VA loan the first time around when they're trying to refinance and it roll in the closing costs. And then it normally just costs them a ridiculous amount of money and there's not really much savings. So I'll also link a video down below around why you should use the VA loan the first time around using the VA when financing a property. Net tangible benefits, standards apply. I'm going to go through that here in a second. So the net tangible benefit worksheet, right? The VA loan on a cash out refinance needs to meet one of these criteria that's on here, right? So a new loan eliminates monthly mortgage insurance. So that would be refinancing from a conventional loan to, let's say, a VA home loan. They have a whole types of stipulations in here. You have to fall within one of these, right? The other part they're going to talk about here, I want to reference to you guys. So they initially have to give you this document to you, and I'm going to show the exhibit here coming up. And then also they need to show it on the final disclosure. They also have some loan seasoning requirements, which is important to understand because sometimes veterans will, purchase a property and then they want to pull cash out right away from the property. Well, the VA does have a minimum. So on here, it's going to state it has to be 210 or more days from the first payment, and you've had to meet at least 6 consecutive on-time payments. So 6 months going into that 7th month, then you can close on a refinance. Also on a type 1 refinance, and this also applies to interest rate reduction refinance loans, where you do then roll in the closing costs. So this is just kind of a side note. The VA does have a 36-month recoupment period, right? That's what it's talking about right here. So basically, and they give you a good example of it. So let's say your payment drops $50 a month. and then your closing costs are $1,436. So you divide that $50 into that, so the recoupment period is 29 months, meaning that you would be able to do this refinance. Just note that escrows, prepaid expenses such as insurance, special assessments, and homeowners association fees are excluded from the recoupment period. I think it's important to understand this because in some states you do have to pay transfer taxes on a refinance. Florida is one of those, so just kind of keep that in mind. All right, this is the document that we were talking about that's being outlined here. So you're going to be getting this document twice, right? So the first one's going to be on the proposed refinance loan. So this is going to be initially sent to you, where it's going to show the mortgage balance, the payment, the loan type, the interest rate, loan to value, home equity remaining. The one thing that's a little bit different also with these cash out refinances is that you do have to get an appraisal on the property. So there's definitely some adjustment that's going to happen, right? Because sometimes thinking of what the value of your property is versus what the actual value is going to be different, and it changes the entire parameters of the loan, right? Comes in higher, you're sitting pretty. If it comes in lower, that's where you start running into issues. But most of the time you can overcome those unless the value comes in lower than the total loan balance you're trying to refinance. Typically that's people trying to pay things off in the refinance. So again, these are things to keep in mind as you go through this journey. But again, here's the document that's going to be laid out for you initially. And then, hey, appraisal, and they're going to also know, hey, this is the net tangible benefit of why we're doing this. And then afterwards, when you get all the numbers finalized, appraisals come back, all the numbers have been figured out, all the third-party fees have been figured out, they're going to send you this document, which you just need to review. Again, sometimes people will skip over this, but you're also going to have this in your closing disclosures to what your final payment is, right? This has a big impact on you guys, and you really need to understand how this works, because the better educated you are in this process, the better financial decisions you're going to be making. Now, this isn't the first time this lender in the VA loan space has faced scrutiny. In previous years, other companies have also been involved in legal and regulatory issues, including allegations of deceptive marketing practices. This reoccurring problem raises large concerns about certain practices in the VA mortgage industry and highlighting the need to be vigilant. Make sure that you're reviewing everything, especially if you're getting a ton of mailers. I'm sure a lot of people are right now with opportunities to refinance with lower interest rates. Read the fine print, and you need to protect yourself from scams. So how do you protect yourself? One essential tool is looking at the net benefit worksheet, which is designed to help you to compare the cost of your current mortgage with a potential refinance. And then the other part to this is that you need to understand the costs that are associated with doing any type of financing, no matter if you're doing a cash out refinance, a interest rate reduction refinance, or purchasing a property. You need to review the loan estimate for Section A lender costs, and also making sure that you understand what the title fees are and if you have to pay any transfer taxes. Like all those little costs that are associated with the home loan, you need to understand, and the lender should be walking that through you or walking that with you so you understand all the different components to it, so you're just not spending extra money. We see it all the time. Now, some of the red flags you need to be aware of from a consumer standpoint is if lenders are overly aggressive in pushing you to refinance or refinance repeatedly, that can be a big red flag, because it's also called equity stripping, because they keep refinancing and increasing your balance. A lot of times I hear people say, I'm getting a loan, I don't have to pay any money, right? I'm getting it for free. Trust me, people, there's nothing free in life. So either they're going to be increasing the rate to give you a lender credit to cover a portion of those costs, or they're just simply rolling the closing costs into the loan and increasing your balance. Now, if you're doing a cash out refinance and you're getting cash out of the property, okay, different story. If you're doing an interest rate reduction refinance loan, you want to keep that balance as close to its original amount as possible. So when you do skip, let's say 1 or 2 payments, then you can actually reapply that money towards a principal reduction. So hope you guys liked the video. Make sure you guys hit that like and subscribe button, and I'll catch you guys soon.